And the other big story, whether the GDP numbers are making you feel encouraged or not, the fact that oil prices have climbed to a 3-month high after the European Union agreed to a ban on most of its imports of crude from Russia is definitely worrying. There's no doubt about that. The latest embargo is part of EU's sixth sanction package on Russia since it invaded Ukraine, and it is the result of months-long talks. There is a temporary exception to the ban on crude oil imports in that oil delivered by pipeline to EU member states will continue. Remember, over 35% of EU's oil imports come from Russia. Now, as a result of that, oil prices moved up quickly, with Brent hitting nearly $124 to the barrel. So what is going to be the impact on crude prices from here on? Somi Sarkar joins in with more.
Well, firstly, if you see the recent factors that have led to this surge in crude prices is fact that the EU leaders have now reached an agreement to ban nearly 90% of the Russian crude by the end of this calendar year. Along with this, if you see in US, the peak travel demand season has started, which is expected to lead to further surge in demand that was already very much strong globally. If you see the other factors that have been keeping the crude at an elevated level is the fact that globally the demand for crude is very strong, and the supply side has been impacted because of less investments going into exploration. Along with this, the OPEC Plus has also been falling short on their production targets, which has led to stockpiles dwindling or falling, and given the fact that the nuclear talks with Iran has also not reached to a conclusive outcome, which is also keeping a lot of oil stock out of the market. And these are the main factors which have kept crude at an elevated level and have also led to a surge in the crude prices recently. Now, what are the sectors that get impacted in India? Firstly, the oil marketing companies. If you see, it's a negative impact on them because they have not been increasing the retail fuel prices, and the raw material price, that is the Brent crude, has been increasing, which is impacting the gross marketing margin. It's positive for ONGC and Oil India because higher crude price means higher earnings and higher realizations. For GAIL India also it is positive because a lot of their gas selling contracts are linked with crude, and rising crude means rising selling price of this gas contracts, which is positive for GAIL. Or for city gas distribution companies, it is sentimentally positive, while it's negative for a host of sectors like lubricant manufacturers, paint, airline industries, tire and cement companies, because nearly 40 to 50% of their total cost is directly or indirectly related with crude.
All right, Jayant Dasgupta, former ambassador and former permanent representative of India at WTO, with us on the show. R.S Pandey, former Petroleum Secretary, speaking with us today. Abhishek, Kumar, CAO, Energy Projections, also with us on the show. Welcome to all of you. Abhishek, let me begin with just your take on whether this is going to get worse before it gets better. We knew that more moves were going to come in from the European Union, and they're trying to wean off Russian oil. What is the direction that you see, and what does it mean for India?
Well, that's a very good question. Now, European Union's decision to ban seaborne oil imports from Russia is a significant move. It is worth noting that almost 2/3 of the EU's oil imports from Russia happens in this way. The decision is already bullish, and as we have seen in today's market moves for oil prices. And moving forward, it will also have an impact on inflation, as you have already mentioned briefly. So nevertheless, it has not been a surprising move. Instead, it is in line with the bloc's Repower EU policy, the central theme of which is to rapidly reduce dependence on Russian fossil fuels, such as oil, natural gas, and coal, as well as to fast forward the EU's green transition. The policy aims to end EU's fossil fuel imports from Russia well before 2030, which in itself is an important step for the EU. Now, the speed of the policy's implementation is breathtaking, and we need to take notice of that. The EU member countries formally approved Repower EU on the 18th of May. Meanwhile, Germany and Poland have already announced that they will stop importing all Russian oil by the end of this year. This, together with the ban on seaborne oil imports from Russia, means the EU will slash its imports of Russian oil by around 90% in 2022 compared with 2021. Now, that is a step change in terms of the EU. So the writing has been on the wall for quite some time, especially since Russia's recent invasion of Ukraine. Economically, it will be tough few years for the EU as the region faces the risk of stagflation. On the other hand, however, Russia will also lose one of the biggest markets for its fossil fuels that in turn will significantly damage the country's economy. So in short, that's the overall impact, I would say.
So now here's where India comes in and the question about what this means for us. Mr. Pandey, I would like your perspective here. Now, recently there was a cut on excise duties levied by the central government to give some relief to the common citizen. States may not follow, but this is not going to hold out for much longer if crude prices continue to grow at this pace. Do you think we're in for an elongated time of very high fuel prices at the retail level as well?
Well, the way crude prices have been behaving, today it has gone to 124, and with yesterday's decision of European Union and also the COVID situation improving in China and the restrictions gradually being eased and the alternate supply sources such as the shale oil in US not picking up and the OPEC plus not likely to increase their level of production. So all this is a pointer to the fact that the crude prices are going to be at a very elevated level. Now, any level beyond 100 is quite unsustainable if it continues for a long time. And now 100 plus level has been continuing ever since the Ukraine war. Even before the war, there was pressure because the investments in oil gas sector, because of environmental reasons, had been dwindling. Now, today's situation is really going to be tough for our country in particular and major importing countries. Now, what do we do? The prices have not been revised. Gradually, there was an increase in retail prices since March end. Before that, for 4 or 5 months, the government decided not to increase the prices, maybe elections were there. After that, gradually the prices went up and up, 10 plus rupees in petrol and similar for diesel. Now the inflation went up and the inflation, everybody knows the retail level is around 8%. Now that is also quite unsustainable. So the government reduced the excise duty 8 rupees and 6 rupees as we all know. But still there is pressure. This ought to have been done 2 months back, but we didn't do that. That resulted in high inflation rate. Now today, again, there is pressure. As you rightly said, the oil marketing companies are losing, so prices have got to be revised upwards. Now, if you revise the prices upwards, again, it will impact inflation very adversely in very difficult times as on today. The other alternative is reduce the excise duty further. But I think a view will have to be taken. We ought to augment our import from Russia. There are some problems, but still China is importing substantially, and we could also do that in self-interest, despite the
that is what I want to come to next, which is why I was also keen to speak to Mr. Dasgupta here on the show. Now, this has become an issue of sorts. India has increased to some extent its purchase of Russian oil. And we responded to questions on that, saying that it's still very minuscule compared to the European Union. Would this be a difficult time to increase that amount? Should we be doing it? Mr. Dasgupta, your views?
It's not going to be easy because the Russian oil will have to be seaborne. And of course, we have limited banking channels which are outside the US sanctions on banking systems for making the payments. We do have another window of in rupee-ruble trade. So we can do that, but we have to, increase perhaps from a low level of between 1 and 2% currently to 10, 15%, which means that in volume terms, we may have to increase our oil imports by 5 times or even more, which may not be very easy because tankers also may not be available to carry Russian oil if the sanctions from the US take a much more stringent path. So these are some of the things which we have to bear in mind. And as the previous two speakers have mentioned, we will probably have to endure a lot of hardship.
Mr. Pandey, let me come back to you now on the point that you were making. Just a bit with that context. Is that now an option we need to look at seriously of maybe increasing our input of Russian oil, and is that feasible?
There are difficulties, but I do believe it's feasible. One doesn't know how long this war is going to continue, but as long as this war is going to continue, the direction is clear. The European Union will like to stop Russian oil to the extent it is possible for them to stop. And so we have to have alternate sources. Additionally, I think the fiscal measures that are currently in force, like I recall an instance in 2008, the crude oil prices surged to $147 a barrel. And what did the government do? At that time, I happened to be Petroleum Secretary. And then at that time, it was controlled regime. Today, it is decontrolled, but yet, in a way, it is controlled. Because are we seeing revision of prices every day as is the system should be? No. So today also, in a way, it is controlled, although we are saying it is decontrolled. But at that time, how did we go about? It was very difficult times. So we thought part of the burden should be borne by the Union of India. Part of the burden should go to the consumer. Part of the burden should go to the oil marketing companies itself. Part of the burden should go to the oil producing companies such as ONGC and Oil India. I think the time has come where, in addition to trying to augment the supply sources such as Russia and some other countries, we ought to look at this pricing structure once more and see that the burden is borne by all the parties, the state government, the central government, and also the consumers and also the oil companies. I think that is the way we have to live.
Abhishek, your view on this discussion, I've been seeing you watching it with a lot of interest. The prospect of India increasing its oil imports, because look at it, I'm looking at the live prices right now and we're still hovering at what, 123
Yes.
dollars per barrel at Brent. This is not going to get any easier. OPEC Plus is not going to prioritize or make things easy for India in any way. This may be an option we have to look at.
Yes, certainly.
Abhishek,
Yeah.
Abhishek, the question's for Abhishek, sir. Yes.
Yeah, I think what a country like India needs to do is also think about the diversification of energy sources. So not just relying on oil, and especially longer term, looking at the longer term and the policies, looking at the global policies, and learning lessons from other regions as well. For example, the European Union itself. So there could be a perception that all the policies European Union are bringing now, that's just in response to the war in Ukraine. The reality is far from that. There has been a concerted effort by different countries within the European Union to move away from fossil fuels even before this war started. And many of the policies, those are working in the EU at the moment. That is part of that kind of effort. So I would say, especially for all the importers, diversification of energy sources, I would say, in my opinion, is a much better option than just looking at shorter term solutions.
Mr. Pandey, just to come back to the point of what are the immediate steps that India can take, it is definitely tough for the government to, have that balancing figure. And then you've had these stories of a windfall tax that may be levied or may not be levied. We at ET Now have done a story today saying that it's unlikely we'll levy a windfall tax. Do you think that we will have to now resort to such desperate measures if there is no let-up on crude?
I would not support the windfall tax as such, because there there are many other sectors and many companies which sometimes gain very heavily and lose very heavily. Since we don't subsidize when they lose very heavily, what is the justification for taking away their profit when they gain? But for the oil sector as such, there is certainly a need for looking at what should be the price level, what should be the level of excise duty. Well, excise duty has undergone a tremendous upward revision since 2014. In 2014, the earning of the government of India from excise was less than 1 lakh crore. Now, today, it is more than 3 lakh crores. Recently, some downward revision of excise duty has taken place that would certainly affect government revenues. But then we can live with somewhat less realization on taxes when the crude level is so high. That is one. The state governments also should fall somewhat in line, although their earning is less than the government of India's earning. But some state government has taken initiative. There should be a dialogue with the state governments also. And then the oil companies also, to some extent, they should bear the burden. I will not suggest a windfall tax on them. But then if we have a consolidated look, as we did earlier when it was a controlled regime, then we did ask ONGC, well, you contribute so much. And while marketing companies, what is your level of profits? And then can you contribute something? And I think we have to live with that kind of thing when the crude prices are so high. Because if you pass on some burden on the consumers also is inescapable. But if you pass the entire burden on consumer, then it will have very adverse effect on the inflation and the consumers' economics for the poor people, for the middle class people, for those who have to ride on two-wheelers. It's going to be very, very tough. So I think instead of saying that it is deregulated or whatever, we have to have a look at the price, the input cost, etc., and resort to some measures as we did when it was a controlled pricing regime.
Yeah. Mr. Dasgupta, in the bigger picture, the European Union is going to suffer economically for the decisions they've taken today, and Abhishek Kumar also outlined this. Now, India can't afford to. We can't afford to have runaway inflation. We can't afford to have people suffer. Already the rates of inflation is something that we need to work on. How do you see this panning out in the days to come if the war does not end?
Well, there is a great deal of uncertainty now as to when the war will end. And then the rebuilding process of Ukraine will start, and some sort of a compromise will have to be arrived at first, of course, between Ukraine and Russia. And then when will the sanctions against the Russians be lifted? So all these are huge questions which need to be answered, and there are no answers, really speaking. So if we are to take this uncertainty into factor it in, we have to be prepared to, of course, give a renewed thrust to our renewable energy program, where we have done very well in the past 3-4 years. And it is, of course, something for the medium term. It is not going to be useful for the short term, where we will have to bear the brunt of inflation, high inflation. The second point is that we have also high food inflation. And that is something which has been a worrying factor, which has led to a ban on the exports of wheat and a restriction on the exports of sugar for the rest of the sugar year, which extends till the 30th of September. Edible oil, of course, the situation has eased since the 23rd of May, because we import a lot of edible oil from Indonesia, and they had put a ban on exports in April. But they have just lifted the ban, so that should ease. But overall, as the RBI has also been trying to impress upon all concerned, there is a need to have a tightening of the monetary policy to control inflation. Now, that has got its consequences. And if the oil prices keep rising, it will be a double whammy. So we have to look at short-term solutions as well as medium-term solutions to tide us over the crisis. And the bottom line is that the poorest people have to be looked after.
Right.
They cannot be made to suffer.
Absolutely. Thank you so much to all of you for joining us on what is a very important discussion. And, today is a day full of data. We talked